property sales in April fell at their fastest pace since 2006, despite several rounds of policy easing. Interest rate cuts may help at the margin, but the specter of mass lockdowns still looms. A double whammy of defaults among developers and falling home prices continues to plague the industry. Evergrande, once China's largest developer and now its most indebted property giant, is currently unloading assets to pay down its massive debt. It's the world's second-largest economy experiencing its own Lehman moment. Joining me today to discuss is Nick Borst, Vice President and Director of China Research at Seafarer Capital Partners. Thank you, Nick, for being here with me.
Yeah, thank you for having me.
Nick, before we turn to China, I wonder if you can tell me a little bit about the housing bubble that triggered the 2008 financial crisis. What caused the bubble to build up and eventually burst?
Yeah, well, thanks again for the question. And I should start by saying this is a question that's still under hot debate in the U.S. Many dozens of books have been written, many hundreds, probably more, will be written on the topic. But from my perspective, there's kind of two main factors that were behind the U.S. financial crisis. The first was a deterioration in mortgage lending standards. So, throughout the mid-2000s, you saw the rise of subprime lending in the U.S., mortgages going to people with lower credit scores, less in the way of terms of down payment. So just a general decline in mortgage lending standards, the rise of subprime lending. This intersected with a huge trend towards securitization in the U.S. financial system. So you had mortgages being packed into mortgage-backed securities that were sliced and diced and sold throughout the entire financial system. And there was this belief that if you kind of took what were somewhat risky financial products, packed them all together through the magic of diversification, you could turn relatively risky financial products into something that was safe. So when these two trends, the deterioration in mortgage lending standards and securitization intersected, you got a very explosive combination. So people were taking increasingly bad mortgage loans, packaging them up, pretending as if they were a lot less risky than they actually were, and selling them throughout the financial system. So when we reached kind of a point in 2005, 2006, where the U.S. housing market started to slow down, then these financial products that were built off these mortgages really started to blow up. And, it's typically, at least in my view, what causes financial crisis is not when a risky financial product blows up. People kind of expect that. It's when something that's viewed as safe is then suddenly viewed as not safe. And that's really what happened with mortgage-backed securities. And so suddenly lots of financial institutions who had been kind of buying mortgage-backed securities by the handful, thinking that they were safe, a good return on investment, suddenly had these mortgages, couldn't unwind them, didn't understand how to value them. And it really brought the entire U.S. financial system to its knees.
I see. And we see many pundits sort of drawing that parallel between the 2008 financial crisis and Evergrande's financial distress. But in a recent commentary, you actually argue against that notion. So elaborate on that. How is China's household balance sheet different from that of the United States? And what's the implication for this round of property market cleanup for China?
Yeah, so there are real and significant problems in the Chinese real estate sector, but those problems are very different than what happened in the U.S. So, going back to what happened in the U.S. in terms of mortgage standards slipping, that hasn't happened in China, or it hasn't happened to nearly the same extent. So Chinese home buyers typically put down quite a significant down payment, 20, 30%. Chinese home buyers that are buying a second home put down even more than that. And so, in general, mortgages, Chinese home buyers have a very significant equity stake in their home. And you haven't seen the same slippage in lending standards. The other part of it is mortgage securitization. And again, in China, that's much, much less of an issue. China has a much smaller mortgage securitization market relative to where the US was in 2008. And so it really hasn't generated this kind of same very, very complex, very hard to unwind mortgage-backed securitization system within the financial system. So in that sense, the problems facing China are very different. There's always this tendency, I think, to want to particularly in the US, we want to take our experience and apply it onto another economy. The US had a real estate crisis in this very specific context. We're looking for whether it will happen in China. what's going on in China, I think, is very different. And the key problems, and we can go into these in a little more detail, but for China, number one is the property developers have very risky balance sheets. Number two, it's that the local governments in China are very reliant on land sales. And number three, finally, the economy as a whole is very reliant on real estate to drive growth. So those are the problems that China is currently grappling with. It's not the same set of problems that the US was grappling with 15 years ago. And that's why I've always thought the comparison to Lehman Brothers really wasn't the correct one.
I see. And now the consensus seems to be some sort of correction in Chinese home prices is inevitable. How do you expect corrections in Chinese home prices to ripple through the economy?
Yeah, so it'll, if we get a Chinese home price correction, I think that's still to be determined, but it will, I think, have a significant impact on the Chinese economy. I think the first order impact is what we call the wealth effect. So that's, Chinese households have invested a lot of their savings in housing, whether that's people's primary home or secondary homes they've purchased as investments. And so there will be a direct impact on how wealthy people feel if there's a house price correction. So if you thought you had $500,000 worth of housing assets and suddenly prices correct, and now that property you purchased for $500,000 is only worth $300,000, you're certainly going to feel less wealthy, and you might pare back your consumption as a result of that. However, kind of drawing back to the U.S. again, the difference is that because the mortgage lending standards in China have been stricter this entire way through, China is not as much at risk of kind of the we used to call in the U.S. kind of send your keys in the mail and walk away from the house. People who hadn't put any money down, hadn't been making any payments on the principal, really had no incentive to continue servicing their mortgage once prices fell. It's a very different situation in China where, because of those higher down payments, people have their own money at stake, they have skin in the game. And so I think there's less of a kind of acute risk of people walking away and defaulting in large numbers as a result of that. The second impact, I think, will be on local government finances. So local governments in China constantly have financial shortfalls. They're responsible for a lot of the spending within the Chinese government, but they get a disproportionately small share of the total revenues. And so one of the tools they've turned to, and it's turned out to be a major funding source for them, is land sales. So the government owns the land in China. Local governments will take land plots, they'll sell them to property developers, they'll pocket the funds and use that to kind of finance their overall government expenditures. With land sales slowing in China, with property developers in a weak state, that channel of financing for local governments is likely to slow considerably, and that'll put a lot of stress on Chinese local governments who are already highly indebted. Kind of the third major impact of a housing price correction in China would just be the overall kind of macro effect. So, the estimates of this vary, but typically between 25 to 30% of the Chinese economy is wrapped up in real estate in one way or the other. So whether that's kind of direct through real estate developers or construction companies, or all the kind of ancillary industries that supply the real estate sector, including consumer durables and all sorts of suppliers. So these industries, as if Chinese home prices correct and the real estate market continues to slow down, it's all these industries that are going to be affected. And so that'll have a net negative drag on the Chinese economy. Housing investment will slow down. All the related industries will slow down. So those are kind of the key economic impacts of a housing market correction. And I think, the difference from my perspective is that whereas in the US, it was much more sort of an acute financial crisis driven by securitization, in China, it's more of a kind of overall macro slowdown, given the great importance that the housing sector plays in the Chinese economy overall. So it's really kind of a very different set of problems that both countries are dealing with.
I see. And, in an ideal world, the Chinese policymakers would execute a soft landing, right? Sort of try to tame its, indebted property developers without shaking broader home buyer or investor confidence. But in the real world, how should they actually do that?
Yeah, it's a very difficult situation, and I don't think there's any magic bullet. What appears to be going on to some extent is what I call a slow motion nationalization of the property sector. So you have a lot of the privately owned property developers are basically not able to get much credit anymore. They're financially strapped, they're facing lots of pressure. And what's happening is that they're selling a lot of their properties over to the state-owned property developers. And so the state-owned property developers, because of their closer connections to the government, are generally more able to access financing. And so you have a shift of housing assets, going from private developers over to state-owned developers. And so while that may kind of put a floor under the property development industry, I think kind of in the long run, it's a negative development, because I think it means that the property sector and by extension the entire Chinese economy will become marginally more state-oriented, less privately oriented. For the entire approach to resolving the property market, it's quite difficult. The problem has built up over many years, and so there's no easy solution. What I would recommend to Chinese policymakers is just to ease up a little bit. So there was this big push at the end of 2020 with lots of policies, most notably the 3 red lines, to really clean up the property sector, to force property developers to strengthen their balance sheets, to reduce leverage. And all of that makes sense from sort of a long-term macro perspective, but it has created real problems given China's current growth situation, where the economy is slowing down, there's COVID lockdowns, financing is generally more difficult to get than it was in the past. And so from my perspective, while the kind of long-term goal that they're trying to achieve maybe makes sense, the timing is off. It's not the right time to push very hard. And I think you've seen very clear reaction to that with many of the largest Chinese property developers kind of defaulting on bonds and other borrowings that they've done. And so we're starting to see like a bit of a retraction in some of those policies where the government is easing up a little bit, kind of easing the pressure a little bit, but still I think, there's more to be done. I'd like to see more to cut mortgage rates to kind of boost the market in that sense. I think there's more China could do to stimulate consumption and overall consumer sentiment. And I think while the goals of forcing property developers to be more responsibly managed and to clean up their balance sheets are good long-term goals, you got to be careful about how hard you push, particularly when the economy is in a difficult environment.
Right, as you alluded to, the Chinese economy is going to be facing a very challenging year. There's COVID lockdown, as you mentioned. There's also significant headwinds this year due to disruptions in the external environment, the war in Europe, etc. So do you think policymakers in China are going to put property market cleanup on the back burner? Is it going to come back later this year or early next year when COVID situation gets resolved? What's that timeline look like?
Yeah, as you mentioned, it's a very difficult macroeconomic environment for China right now, where COVID lockdowns, we've had major Chinese cities under lockdown for several months now. There seems to be kind of a large soft lockdown over much of the country. Consumer sentiment is very weak in China. Consumption really has not bounced back to its kind of pre-pandemic trend. And, China's facing a difficult external situation where, relations with the U.S. continue to deteriorate. The Fed is raising interest rates. That puts a little bit of pressure on China. And so it's quite a tough environment for Chinese policymakers to kind of push through these changes to the real estate sector, which would be, difficult in any circumstance, but are especially difficult right now. What I personally worry about is I think, the top officials in the Chinese government, including Xi Jinping, have said now for 5 years that housing is for living, not for speculation. And so I think setting out that kind of political marker makes it very difficult for them to change policy and adjust in the face of kind of different economic situations. So I think we're seeing some tweaks at the margin where they're trying to roll back a little bit of some of these more damaging policies. But I think politically, it's very difficult for them to kind of do an about face and say, actually, no, what we need is to kind of give the housing market some support in the short run and maybe address some of these long-term issues over time. So that's kind of my main concern is that, through rhetoric and public statements that the Chinese government has sort of boxed itself into a very specific approach to the housing market. And that's going to be hard to change domestically, even if the macroeconomic situation is very different from when that policy was first rolled out.